Hello, welcome back to my YouTube channel. This is Aishwarya. We are seeing Accountancy of Class 11 under CBSE Syllabus. This is Chapter 3, Part 1, which is Recording of Transactions 1. So, in this video, we'll be covering the following topics. Okay. Preparation of accounting voucher. So, before that, we'll see what is a business transaction. So, transaction is something that involves two elements. So, something that will go out and something that will come in. So here in this example, father buys a computer worth 35,000. He pays cash and the dealer gives a cash memo. So when you make a cash payment, you get cash memo as a proof for it. Okay, so the father pays cash and what comes in is the computer. So vouchers. So what are vouchers? Vouchers are the source documents. It's a proof of the transactions. So when you make a transaction, a cash transaction, say in a cash purchase, so you will get something called a cash memo. Or when there is a credit sale or credit purchase happening, there will be something called invoice. So that will be the proof for that credit purchase or sales. Okay. Then comes pay-in slip. So when we make bank deposit, so pay-in slip will be the proof for it, the voucher that will acknowledge such deposit. And when you make payment via check or via bank, so check is the voucher underneath it. Then salary slip is the proof for salary paid. All these are different types of forms of vouchers that is involved in the day-to-day transactions of the business. So based on these vouchers, the accounting entries will be made in the books of accounts. Okay. Now let's see the types of accounting voucher. So first is a simple transaction voucher which will have one debit and one credit. It shows that one account is debited and the other account is credited. Example, cash paid for goods. So the specimen is given in your textbook. So this is a specimen of transaction voucher, okay, which has the voucher number, date, one debit account and one credit account. So you write the amount, narration and the signature. Then there is something called compound voucher. So compound voucher is a voucher where one debit transactions and a multiple credit transactions are entered. Otherwise, one credit transactions and a multiple debit transactions are entered. Okay. It's like that. So if you see the specimen here, so this is a compound voucher. So if you see there is one credit account and more than one debit accounts, or in a credit voucher it is one debit account, more than one credit accounts. So in case the company pays salary, okay, so there will be sorry, so salary is an expense, right? Salary account will be debited and cash will be credited. So in such types of transaction these vouchers are used. Okay, there is one more type of voucher called complex voucher where there will be multiple debits and credits account. So this is the specimen that is given in your textbook where there are more than one debit account and more than one credit account. Yeah, you can see multiple credit accounts that has been mentioned here. So this is the complex voucher. Okay. So what are the essential elements of an accounting voucher? So they say accounting voucher, first it's in a physical form, it should be in a proper paper. Okay, the paper should be of a good quality. The name of the firm should be there, date should be there, and the serial voucher number should also be there. Okay, and after that the corresponding debit and credit account should be there. So which account is debited, which account is credited, that should be mentioned, and then the amount will be entered in figures, and then the narration is given, and then there are two signatories, the one who prepares the voucher and there is someone who is authorizing it. So all these are the essential elements of a voucher. So it says good quality paper, firm name is important, the date of the actual transaction, not when you record in the books of accounts, so when the transaction happens, serial number, number of accounts debited and credited, okay, and then you have this debit amount you have to enter in figures, and then description should be given, signature of the person who prepares it and the one who authorizes it. Okay. we'll see what is an accounting equation. So accounting equation, what it says, that assets of a business are always equal to its liabilities plus capital. So this is the basic accounting equation which says asset is equal to liabilities plus capital. Okay. Now what is? So what are assets? Assets we have already seen. Everything that the company owns is called the assets, be it your land, building, your investments, stocks, everything comes under assets. And what are liabilities? Whatever the business owes to the outsiders is the liabilities, like the bank loan, the creditors, everything. And then the capital, it's the owner's money that is invested in the business. Okay. So the other forms of the equation are, in order to find the capital, you can subtract liabilities from assets, and in order to find the liabilities, you can subtract capital from assets, you will find. So with this, we'll see an example that's given in your textbook, which is Rohit starts a business by investing 5 lakh cash as capital. So what happens here? Cash comes in as capital. So there is an increase in the asset. Okay. And the capital is also increased by 5 lakh, where asset is equal to, so liabilities and capital will find place in the liability side of the balance sheet. Why? Because capital is also a liability towards the owner from the business point of view, right? Now we'll see this example. Okay. Yeah, right. So Rohit started a business with 5,000. So what we'll try to analyze from this example is how every transaction of a business has two entries, okay, one debit entry and one credit entry, and how it is affecting the balance sheet and whereby the accounting equation is balanced. Okay, so that's what we'll see with this example. So in order to, before preparing the balance sheet, we'll just find the balance of each accounts. So first, Rohit says has started a business with a capital of 5 lakh. So what is coming here in is cash of 5 lakh. Okay, and then there is a capital account that will also have 5 lakh, right? Then next transaction, he opens a bank account in State Bank of India with the amount of 4,80,000, right? And then next we'll see the bank account. So cash will reduce by 4,80,000. The reduction I'm mentioning it in brackets. So bank will have a balance of 4,80,000. Then he bought furniture for 60,000 and a check was issued on the same day. So he bought furniture. So furniture account. So he's made a check payment, which means he has paid from the bank, right? So the bank balance will reduce by 60,000 and furniture worth 60,000 will come into the business, right? Next. Bought plant and machinery for the business for 1,25,000 and an advance of 10,000 in cash is paid to Mr. Ramji Lal. So here you have to observe. So here he is buying plant and machinery, and of which only 10,000 is paid in cash. The rest is a credit purchase. So whenever you find the name of the person, it is a credit purchase. Okay. If it is a direct cash purchase, they would have mentioned bought with cash. The name will not be there in the question. Okay. So Ramji Lal is a creditor now. Okay. What is bought? Plant and machinery worth 1,25,000 is bought. Okay. So 10,000 has been paid through cash. So cash will reduce by 10,000 and creditor, the company is liable to pay 1,15,000, right? Now next. Goods purchased from Mrs. Sumit Traders for 55,000. Okay. So again, if you see here, name is mentioned. It is a credit purchase. Okay. So there is no cash factor involved in this. So stock of 55,000 is increased, and how they are making credit purchase, so the creditor will increase by 55,000. So in this transaction there is an increase in liability and increase in asset. Okay, again there is a balance. Then goods costing 25,000 sold to Ranjini Enterprises for 35,000. Okay, so there is a reduction in stock worth 25,000. Okay, so they have sold to Ranjini Enterprises. Again you see the name, which is a credit sale, so you find there will be creditor. Okay, so when you maintain separate account, you can maintain with the names, but here just to find the balances, I am just writing in a common term, sorry, as debtor. Ranjini Enterprises will be the debtor. Okay, so he is supposed to pay the business 35,000. Alright. Okay, so that's the last transaction. Here there is a 10,000 of profit. Okay, so profit will add it to the capital. Now if you total this will come up to 10,000. Here it is 5,10,000, and here it is 4,20,000. Furniture balance will be 60,000. Okay, and here it is 1,70,000, right? Plant and machinery stands at 1,25,000. Stock at 30,000, and debtors at 35,000, right? Okay, now we'll categorize the accounts. So cash is a asset. Capital will go to the liability side of the balance sheet, right? Bank is again an asset. Furniture is an asset. Creditor is a liability where the company owes. Then plant and machinery is a fixed asset. Stock is a current asset. We'll bifurcate even that. Debtor is a current asset. So all these are assets and liabilities which will find place in the balance sheet. Okay. So here it is balance sheet of Mrs. Rohit as on the date. Okay. So this side will be your liability side, and this will be your assets. Okay. So cash is an asset. Cash balance is 10,000. I am picking it up from here, all the totals. Okay. Capital will go this side. That is 5,10,000. Bank is an asset. 4,20,000. Right. Then furniture. Balance of 60,000. Then you have the creditor, it will come to the liability side, which is 1,70,000. Then you have plant and machinery. Please don't use short forms in your exams. I'm just using it to ease my writing. So you better write everything in detail. And then you have stock, which is 30,000, and finally you have the debtors standing at 35,000. Okay, so if you total this, both the sides, it comes up to 6,80,000, and here also it is 420, 430, 490, 490, 590, 50, 680. Okay, right. So here you can see assets and liabilities are equal. So that's how the equation should be balanced. Okay. So yeah, right. So in the end of video we saw what is a transaction, we saw about the vouchers, how vouchers are the proof of every transaction, okay, and how it should be arranged serially. Based on that the accounting transactions are entered, and types of vouchers we saw the accounting equation, and which is also called the balance sheet equation, and with an example. So with this we have come to the end of the video. The same video is also available with a Tamil explanation. The link of it will be given in the description. If you like this video, share it with your friends, subscribe to the channel. See you in the next video. Until then, bye bye.